this one here. This is our real estate map. And I mean, the first thing you can see with it is everyone's talking about how the real estate market is collapsing. Everyone being that, the people who think Toronto is the center of the universe. So I mean, yes, houses in Ontario are down, 4.8%. Okay. Down in BC, 5.8%. But look at the green in the rest of the country. Green, 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 green. Okay.
Everywhere else is going up except for those big hubs there. So what's going on in those regions?
I mean, you have to understand, first of all, it's like, did you make a bad purchase? Okay. So did you make a bad purchase? Were you the 10th person in on a bidding war, bidding over list price and not doing any due diligence because someone told you this was the last opportunity to get in on real estate for the rest of your life? Okay. And this is not unique to Ontario. It's like one of the best financial decisions that I ever made is I didn't buy a property in Alberta in 2006 and 2007. I continued to rent because it just seemed it was tempting. Like people were lining up at listings, putting offers in. I guarantee you what happened in Alberta in 2006 and 2007 was
Mm-hmm.
far and away different than what's happening in Ontario. Now, people think it's just like, oh, it ran up to the moon. It's like, I mean, we see people that are still under, like they're still underwater. We're talking almost 20 years later now
Mm-hmm.
on those purchases because they were insane. They were
Yeah.
absolutely insane what happened in Alberta at that time with
Yeah.
with oil prices, right? It's hard to explain to people who weren't here. It's like all of a sudden, you go to McDonald's for lunch and the drive-through, not just the drive-through, the entire restaurant would be closed because of shortages of staff. Like you would just
Mm-hmm.
see help wanted signs littering the street everywhere. All of a sudden, you had a 20-minute commute that suddenly turned into 40 minutes in what felt like a couple of months. Like it was just like it was, for those who haven't experienced an oil boom, it's much more violent than a population boom caused by immigration. Like
Yeah, for
much,
sure.
much more violent, right? Same with on the downswing too.
Mm-hmm.
Also much more violent on the downswing. And so, yes, you're seeing a downswing here in Ontario, but it's like you can see the oil towners from around North America saying that they think that's a contraction. They're laughing, right? They're just thinking it's like that's pain. Oh yeah, 4.8% down on your house. That's pain. Like come on, like they're they're kind of laughing on it. But it's unfortunate. It's tough. But like so, the main mistake one of the key mistakes that people made is that they just got swept up into it. And, as we teach in the boot camp all the time, it's like if you can't actually do your due diligence, if what you're bidding does not make sense on a historical perspective, and often like you don't even have time to do any due diligence to see if what your offer makes sense on a historic perspective, that's the market telling you that it's overheated and you shouldn't be purchasing, right? And then you see, condo investors is like, you know, what made you think that buying two or three condo units was somehow like a multi-unit strategy? Like,
Mm-hmm.
why are you 3 or 4 units deep that you're trying to close on, right?
Mm-hmm.
Why is real estate they can't close on the unit? It's like, why is real estate 99% of your assets? Like that, these are all problems, right? These are all problems that created this. It's like, generally it's like you want more and more desirable real estate. That's safer. Okay. Buying, you know, 3 or 4 dog crate 400 square foot condo. So it's like that's pretty real. That's a
Mm-hmm.
pretty risky situation, right? Like you're really determined on things being hot because when things are not so hot, all of a sudden the capital really dries up for the less desirable items, and it's a little more palatable on the more desirable properties,
Mm-hmm.
provided you bid something reasonable on those more desirable properties, right? So and not got it and not purchase it with a bidding war. So yeah, I mean that's what I see. Trevor, what do
Yep.
you see like? Because you see the mortgage material with
Mm-hmm.
Entrepreneur Mortgage Solutions. It's
Yeah.
it's it's like the degree of like what do they think the sky is falling?
Well, where I am, we are in Edmonton. I don't see the same level of stuff. Like we see the same pundits and people who are talking online about the real estate market is crashing, but it's only in those big regions. Where I am in Edmonton, that's not the case. People are still buying in Calgary and Edmonton. And also like lenders rates, they're doing, sales on rates, right now, and different things. So they're trying, there's a sense of urgency for them now to be, offering special rates for limited periods of time so that, they can get some quick sales and quick closes, get people into the market. I see a lot of, good things on both fixed and variable rate mortgages. That's what I'm seeing where I am right now. I don't see any mass hysteria. I think I've got some friends who are real estate agents here in Edmonton, and they're doing really well. I mean, even with really nice properties, they're able to move and sell high value properties as well as different all single family homes. I think the problem that happens in Ontario is things got overheated with the condo market. And now with some uncertainty with manufacturing in the region, that has caused a pullback, and also with overregulation with getting stuff done in Ontario. There's virtually no single family homes being built, and that's going to be a big problem, especially with the amount of population that has kind of exploded in Ontario. I don't know. What are your thoughts on that?
Yeah. I mean, there's definitely some challenges there. Like the challenge is going to be finding desirable real estate, right?
Yeah.
Uh, the government will find some shipping container to decide that you should live in that, right?
Oh yeah.
They'll present that option, right? But
Yeah, I saw that.
desirable real estate is, and so the further up the further up the scale you get, the less risk that you take. Probably maybe the
Yeah.
less reward you have too.
Mm-hmm.
But the further up the desirability change, the less risk that you take. But I want to get into the single biggest thing that everyone misses on real estate investment is, and this is what everyone misses on all investing is, as we bring up in the boot camp, and it's like, what are you buying any investment with? It's like you're buying investment with dollars, with Canadian dollars. And when was the last time a real estate agent or a mortgage broker or any even investment advisor, sitting down and just like looking at, these are your options for rates of return, but it's like, do they actually quantify what they are? What are you buying them with? I mean, you're buying them in dollars. How many dollars are there in existence? And
Mm-hmm.
here's what, people don't understand. It's like if the money supply increases significantly, like I mean, even if you have like Argentinian style inflation, it's like all assets will go up really significantly, including real estate. Okay. Like, and so we have the comparison with the 90s. Okay. And so what we have graphed here is we have the actual M2 money supply starting in 1971. Okay, so this is starting in 1971, which is essentially the start of our monetary system, where the
Mm-hmm.
U.S. came off the gold standard. And yes, we're not the U.S., but what does Canada hold in reserve assets? It's not gold; they hold U.S. treasuries. Okay, and so this is the start of it. And it's like comically the start of it. We're talking about the M2 money supply being 40 billion. I mean, 40 billion, it's like the government can miss that on an annual budget these days and not. But that was the entire money supply. That was everything. That was the entire money supply in 1971 was 40 billion. And fast forward to today, we're talking about the money supply being 2.7 trillion with a T, 2.7 trillion with a T. Okay. Um, that increase that we're talking about is 8.1%, roughly 8.1%. The money supply has gone up by 8.1%. Now, alternatively, the population in Canada has grown by 1.2%. So we're hanging around 42 million people in Canada now. That's a compound annual growth rate in population of 1.2%. And so there was a couple questions that came up here, recently. Is like the first question that
Mm-hmm.
came up was, you know, a couple of years ago where it was like interest rates are going back to 20% like they did in the 80s, right? And I told everybody that is not going to happen because there's three times as much debt in the system. It's like just go over to usdebtclock.com and multiply $37 trillion by 20%. And then, look at what the US's interest expense would be. It's like it's financial Armageddon. The thing would
Hmm.
just blow up. The 7-8% interest rates were just as stressful. The
Hmm.
7-8% interest rates were just as stressful as 20% was in the 80s because the debt load was three times higher. Okay. And that's kind of the reality of it. And so now what we're getting is, well, the real estate returns are going to be like they were in the 90s. Let's drill into that, okay?
All right,
Because
let's do it.
history gives us the lesson in that. And this is the growth in the money supply. And it's average at the 8.1%. But there's seasons of this, okay? And so now we look from the 90s, okay? And we actually look at from 1991 to 1999, okay? This is the period that people are drawing parallels to. The money supply only increased by 3%. That is an incredibly restrictive period in history. Okay. If you take, the entire 90s here, we'll grab the first year, that's 8.8%. You can see that average is only 3.5%. That's significantly below the historical average. Okay. That's over 8. And then that ties into the inflation rate. Okay, so you see the inflation rate. It's like what causes inflation? It's like we get caught up in the smaller variables inflation, which it's being tariffs and energy prices. They really do affect everything in the short term, but in the long term, inflation is a factor of the money supply. If you do not have an increase in the money supply, you can't have high inflation. And conversely, if you have a really expensive money supply, eventually you're going to have significant inflation. And there's no other two ways about it. It's not a relationship that's quick. It's a delayed fuse. That's like call it. I think it's I hear people all the time say 12 months, but in my historical review, it always seems more like 24 months. And then you start seeing it's like what happened when they contracted the money supply. They had historically low inflation. We're talking about once they started contracting the money supply, it's like, look what happened with the CPI numbers. It's like it's averaging 1.5%, which was to the lower end of the band of the 1 to 3%. And historically, inflation has averaged 3.9%, even when you factor in the high inflationary periods where we have like in 2022 and going back to the 80s. It's like, I mean, when you go back to the 80s, everyone is like, why was there high inflation? It's because there was massive increases in the money supply. Look at the increases in the M2 money supply. We come off the gold standard. There's significant deregulation in the banking industry, and the money supply just explodes, and the CPI explodes too. And so now we have people suggesting that this real estate period is going to be like the 90s, and they're studying immigration patterns and migration patterns across the country, but they're missing the single most important variable, which is the money supply. Okay. And all of those other variables are important, but ultimately you're buying them with dollars, and you need to know what are those dollars worth, how many of them are in existence. So when you're evaluating real estate, people have to understand it's like, what is the money supply? Okay, like why has it been restrictive? It's like the money supply absolutely exploded in 2020, and that's
Hmm.
what led to the high inflation. But look at what has happened in 2022, 2023, 2024, and even partway through 2025. It's like we're only averaging a 4% increase in the money supply. And so, why are real estate prices suppressed? It's like, does immigration matter? Yes. Does the tariffs matter? Yes. But ultimately, what is the single biggest hammer? It's the money supply, because ultimately you're buying them in dollars, and you have to understand how many dollars are in existence chasing those houses. And I would suggest, Trevor, is that you know nobody talks about this. It's like nobody talks about like it doesn't matter. You can go through school to become a chartered professional accountant. It's like, Trevor, you're a mortgage broker. Did they ever talk about the M2 money supply and dollars in existence? Was that a single question on the test to become a mortgage broker?
No, that was absolutely not on the test at all. It had nothing to do with the money supply. They talk about mortgage rates. They talk about variable, adjustable, fixed rates. They talk about your money laundering and all that kind of stuff. But they never mention the money supply. So let's talk a little bit about the money supply. So you say it is like the most important factor that you should consider when you're investing or in real estate or anything else. What does government do in order to change or augment that money supply? So what are the triggers that they put in place to either increase that money supply, which greatly affects the asset prices and the amount of
Okay.
money available to lend and borrow?
Yeah, I mean, what do they do at a smaller level? There's fiscal spending, and so it's governments running deficits, and governments have perpetually been running deficits, since basically since the '90s. Like it was, Harper had 1 or 2 years there where there was a marginal surplus, but then you actually have to go back to the '90s where liberal Jean Chrétien actually balanced the budget in the '90s, which is kind of comical because anybody balancing the budget right now would be considered some sort of far right conspiracy theorist, right? Even like Trump in the U.S. is like, oh, it's a little conservatives. Like, what was the 10-year bill that's going to be $20 trillion in 10 years? It's like,
Yeah.
it's just it's comical expansion of the money supply where just fiscal spending, governments are running deficits, they have to borrow that money, and so that is an increase in the money supply that goes out there. But that's the smaller scale stuff. The bigger scale stuff is what can be achieved through central banking, and so what can be achieved is the central banks across the world, so the Bank of Canada and the Federal Reserve, they can go out into the market and they can buy bonds. Effectively, they'll buy often mortgage-backed securities. Sometimes they'll even get as aggressive as buying bonds in the commercial banks themselves. And what that does, once they buy up those bonds, all of a sudden the banks can go out and lend that capital again with the fractional reserve system. So you put $1 in the bank, they can lend it out 10 times. But if the central bank takes it off their balance sheet, they can go do it again, and the money supply starts increasing really exponentially, and you don't even see it as a actual. This is not even a debt that's listed to the federal government. It's just assets being purchased basically on margin by the central bank, and what that does is like, where does most of the money supply creation come? It's like the central bank. It comes initially from central banks, but then whatever the central banks inject is magnified exponentially through the commercial banking system. And that's how it happens. Okay. And that is actually going to be the solution. Ultimately, governments around the world are not going to, you have to think it's like your is your real estate going to perpetually go down in value once you start getting out of the, did you just overpay for did you pay $2 million for a house that has traded for 10 years for less than $1 million, or did I buy a 300 square foot condo on pre-spec when the number just doesn't make sense? Like, forget about those outliers. Like
Mhm.
once you made a quality real estate purchase, you have to just evaluate. It's like, is it going to go down? It's like, could it go down only if governments, in Canada and to a large extent, even in the U.S., because ultimately that is the global reserve currency, and pretty much every country in the world, including Canada, holds it as a reserve currency. You have to believe that they are going to balance budgets. Like that's it. So if you think real estate is going to go down long term, it's like it's almost impossible for that outcome to occur
Mhm.
unless governments around the world balance budget, unless there is significantly tightened M2 money supply on a long term basis. And so we see this now, Trevor. Like this is, right now, this in the last 22, 23, 24, and 25, it's like we're only averaging a 4% increase in the money supply, which basically, in order for us to get the regular growth, you need about 8%. Okay, and that 8% would get you kind of the average inflation if you have an 8% increase in the money supply, that would kind of give us that inflation, the CPI, the fake government inflation to 1.3%. And that will give you the historical return in Canadian real estate of about 6%.